All right, trade pros. Good morning, everybody. Happy Friday. And today we got a huge update for you guys. We're talking about everything you need to know about the Jackson Hole Symposium. It's going to be a pretty lengthy update, but it'll be a very informative one. Hope you're having a great Friday morning so far. Today's about to get eventful. I have a long gold position already. And let's see what we get. Markets are selling off. Some tariff talk overnight. Some new tariffs imposed by China. Oil prices are suffering the most. We'll talk about that. But first, we have to talk about everything you need to know about the Jackson Hole Symposium. All right, first of all, Jackson Hole is hosted in Wyoming. All right, and it's been there for the past 2 decades. They've had this annual symposium held by the Federal Reserve Bank of Kansas City. It's an annual event, and they gather central bankers around the world to discuss new monetary policy changes and the state of affairs. The most important part comes tonight, or this morning rather, at 10 a.m. Eastern, so just 1 hour from now, under 1 hour almost. Jerome Powell will address the Jackson Hole Symposium. It started yesterday at 6 p.m. It goes all day today and Saturday. Tomorrow is the last day, so it's a 3-day event. Jerome Powell's address on Friday morning is by far the most important. All right, and we're heading into this Jackson Hole Symposium with recession fears growing around the globe. Not tomorrow, not a week from now, but a recession being imminent 12 to 16 months from now. There's a lot of fears and concerns about how this economic data has started to deteriorate. All right, it's one of the most anticipated meetings of past years. This could be huge. It has the opportunity to cause massive market volatility if Jerome Powell announces anything new. All right. A lot of people watching this are expecting Jerome Powell to say that this is the beginning of a new easing cycle. We don't believe he's going to go that far, but we do believe he's going to be dovish and more accommodative to markets. Now, the extent to which he's dovish or more accommodating, you can expect to see a market rally, all right, as you start to see the dollar drop, and gold will also bid in this situation. All right, so how has these past symposiums caused market volatility before? In 2018, there was a 0.25% rally the day of Jerome Powell's address, all right, and then 0.5%, almost 0.7% rally on the Monday following. All right, in 2017, it was flat. 2016, mixed results. The biggest one was in 2011, when the day of caused 1% movement in the S&P 500, and the day after caused 2.75%. All right, so huge movement, huge volatility, and there's a lot of opportunity. It can either be a complete dud and nothing happens, or there might be some very drastic volatility with some great low risk, high probability market trades. All right, so you got to watch this, listen, and in this Jackson Hole Symposium, I strongly recommend you're part of a team. Trying to trade this alone, going to battle by yourself is not advised. If you're going to go to battle with a strong team. All right. You might be Kawhi Leonard, but you still need the supporting cast. I'm a Raptors. Well, I'm in Toronto, so by default, I like the Raptors. So without him, all right, yes, it would have been harder, but there's more than just Kawhi around this event. So what I'm trying to tell you is this. Let me give you some reviews of how important this meeting is. In 2014, let's go through some J-hole memories. In 2014, ECB, European Central Bank President Mario Draghi, laid the groundwork for quantitative easing in his address at the Jackson Hole Symposium. He warned inflation expectations had deteriorated and they need to do something. Just a month later, the ECB launched QE, quantitative easing, to the tune of 2.6 trillion bonds, mostly government bonds. So just a month after the address, where the new news was circulated, there was a 2.6 trillion new round of stimulus. In 2012, Fed chairman at the time, Ben Bernanke, signaled the third round of quantitative easing on the table at his speech at Jackson Hole. This was QE3. The Fed launched QE3 the next month. All right. In 2008, as the financial crisis raged on, Ben Bernanke left the formal conference proceedings to discuss market developments with his team. All right. He said, we try to remain inconspicuous, but leaving the conference at different times, and then subsequently launched QE3. All right, in quantitative easing 1. In 2007, in his opening speech, Bernanke put an interest cut on the table. He said, hey, look, economy is rallying. We need a cut. It's getting overheated. All right, this could be a disaster. We need to cut rates. And central bank slashed rates by 0.5 percentage point the following month. All right, in 1999, Princeton University professor Bernanke at the time, he was not the Fed chair at the moment, he made the case for Fed pursuing a strategy of flexible inflation targeting. Later on, just a few years, it wasn't right that same year, but in 2012, the Fed adopted a 2% inflation target and Bernanke became the chairman. So as you could see, this Jackson Hole Symposium is a very significant event. All right, there's a lot of excitement around it because big things happen out of it, as I just gave you some former examples of these Jackson Hole Symposiums. Now, let's talk about markets. If the comments are dovish meaning that it's more accommodating, lower interest rates, more stimulus, more support for the economy from the Federal Reserve, that's called dovish. Whenever there were dovish Jackson Hole addresses, all right, happened twice since, no, it hasn't happened. This is for total, all right? Cumulative gains of the S&P 500, the last two times it was more dovish, were 11.55% the week following the address. All right, hawkish comments down 14%. Fall on December 19th and July 31st. Cumulative total on the S&P down 14% the week following. Very massive market movement potential if there's big change in the policy. This morning we heard some updates for some Federal Reserve non-voters, and a lot of them had said at this point, hey, you know what? We don't think we should cut rates. Mester spoke, and what he said was that he's a hawk, by the way. He wants to see higher interest rates. So he said he dissented with the decision to cut rates, and he thinks that based on the economic data, this is where the rates should be at. He said he's open to future policy changes, but thinks they need to observe the data closer before the next Fed meeting. And I think that's what you're going to hear Jerome Powell say. I personally think he's going to disappoint with the expectations out of J-Hole. I don't think he's going to say much, but traders are going to hang on to every single one of his words. So you need to be in a community that has access to live news that breaks down the report, and you need to have a community around you that's traded these events before and can tell you what the sentiment equates to. A lot could be said, and you might be left scratching your head, hey, is this going to go up or down? Right? And it's a tricky thing to assimilate. There's a lot of different criteria and factors that go down into sentiment, long or short, at the end of the day. All right, that's what we do together in the room. I invite you guys to join us. If you get on board literally within the next 20 minutes, we'll have time to add you to the trading room, and you have a 14-day money-back guarantee if you really hate everything you're seeing. And not many people take us up on that. And the ones that do, it's due to time commitment. So come on out, trade with us. This is your shot. This is your opportunity. If you've been following us on YouTube for a long time and you're on the fence, let this event push you off the fence and experience the advantage of trading with the trade pros in the room. All right. Also this weekend, world leaders will arrive in, I apologize to the French-speaking community, in Biarritz, France, today for the G7 summit. It's scheduled to start August 24th to the 26th. That means Saturday, Sunday, and the Monday. The summit's taking place on, again, growing global concerns. There's going to be a lot of talk here on whether or not Russia should join again to call it the G8. All right, that's going to be up for discussion. Some one-on-one meetings are set up, and this is how we're entering this very important G7 summit. Chancellor Angela Merkel has lost a lot of her power and weight in her own government. All right, Italy just saw its prime minister resign. Boris Johnson will rep Britain amid this Brexit turmoil that now looks like is going to happen as a hard Brexit with no deal. And Donald Trump strolls in looking for allies to take on China. At the end of this G7 meeting, traditionally, they've issued a joint statement of agreement saying, based on this meeting, this is what we took away from it. And it's a joint statement everyone approves. This G7, I don't think there's going to be a joint statement. Last G7, there wasn't. And I don't think there's going to be much to come out of this. But the interesting part will be what all of these participants say afterwards and during this G7 meeting. So huge meetings, big events, big volatility. I'll tell you this, if you are a swing trader thinking, hey, you know what, should I hold another weekend to my position? I'd say take some profit today, because no matter what happens over the weekend, if you're locked out of your trade and you can't trade, which will happen, right? Markets close. There's a significant risk of a gap happening on the Monday reopen for stocks and Sunday's reopen for futures. So caution is needed in this situation. It's up to you. It's not my money. It's your money. It's not my position. It's your position. And my advice, personally, based on my experience, is to take that into account when you're thinking about your portfolio structure. All right, in today's markets, everything was up across the board until markets got hammered pre-open. We're still headed lower. We just posted an overnight low at 2.5 on the SPOOs, below the prior day low of 4.25, and now we're getting a little bit of reprieve. We're getting a little pullback, if you will. Crude oil today is the big loser, down 3%. China announced new tariffs on American auto parts and on crude oil exports to the tune of $75 billion worth of American goods and crude oil. That kind of freaked out the market, and China backtracked their comments a little bit, saying it will allow certain U.S. car and car parts to apply for tariff exclusions, to impose extra 10% tariff on U.S. wheat, corn, and sorghum from December 15th, and extra 10% on U.S. beef and pork from September 1st. Fed's Kaplan, Dove non-voter, says does not see this as a rate cutting cycle, reiterates openness to adjusting rates, but prefer would not to. He is a Dove and doesn't vote, so really it's nice to hear from you, Mr. Kaplan, but maybe next year or the year after when you're voting, we'll take a little bit of more note of that. We've also set up our TV up there, as you guys could see, to show some news finally. We're not streaming Bloomberg anymore because who needs Bloomberg when you got the raw news, right? Bloomberg is a interpretation of the raw factor of news. We're good enough at doing that ourselves. All right, on the economic calendar, new home sales at 10 a.m. Nobody's going to care about that. Everybody will be waiting for Jerome Powell's address, 10 a.m. Eastern time. All right, it's 9 or 8 a.m. rather in Wyoming, 10 a.m. Eastern time. All right, get ready. What this means is at 9:30 until 10 a.m., you're probably going to see reduced volatility. For me, I usually try not to trade within 15 minutes of a news event. And if you think about it, 9:30 it opens, 15 minutes before 10 a.m. is 9:45. So it leaves me 15 minutes to go in there and squeeze out a trade. I'd rather be patient, wait, keep the gunpowder dry, and when the time's right, fire the right bullets at the right time and at the right targets. All right, so that's at 10 a.m. Come on over. I invite you guys to join Trade Room. We're going to have great fun today. It'll be recorded as well, so you can have it cataloged for replay and for a learning opportunity later on in the future. That's what I got from you. That's all I got for you, rather. Thank you for watching. And in the words of Colbert, now it's your turn to thank me by hitting the like button and subscribing to our channel. I appreciate you guys. See you in the trading room. We got a great day. Wish you good luck, good trading. If you don't come out to the community, that's fine. I'll tell you this. Manage your risk. Trade like a trade pro today. Set yourself an X dollar amount that you're willing to use as risk capital. And if you hit it today, do not exceed it. It's a Friday. Fridays are unforgiving for traders who start trading emotional, right? Very unforgiving. So be careful, manage your risk. See you guys in the trading room. Hurry up and get on over if you want to check it out, because you got till 10 a.m. At a certain point, we're going to be busy and won't be able to add you to the webinar. So come on out. Now's a chance. See you guys there. Have a great weekend. All the best. And after the Friday's done, it's going to be wild madness. After the Friday's done, take some time, relax the weekend with your family, friends, and loved ones. And I'll see you guys on Monday. Appreciate y'all. Have a great day. And I'll see you Monday. Ciao. Good luck. All right, trade pros in the room. We got a pretty big day. Some pretty big movement as well. I sniped the gold trade a little bit late. I'll show you guys where it was and the reasoning behind it. We are close to the previous day and overnight high, but I think gold rallies. Right now, you're seeing a little bit of selling due to the fact that there's some profit taking on the long positions going into this massive speech. Yesterday didn't have a whole ton of volatility, so there wasn't as much opportunity to offload positions. We're running out of time, 45 minutes before this address. Let's get started. I'm going to do the S&P 500 levels. Then I'm going to pass it over to, actually, we're going to start out with Steven on oil, because the oil market's already open and there's a ton of news and events hitting this. So let's get started. Boxy, over to you. Then I'll take it over for the S&P 500. YouTube, adios. We'll see you Monday.